Uh-oh. Did you find a mistake on your tax return that was already filed? Well, bad news. You're a tax evading criminal now, and it's just a matter of time before the IRS finds you and arrests you. Just kidding. Don't worry. Everyone makes mistakes, and today I am going to break down when you actually need to file an amended tax return. And you'd actually be surprised because not every mistake needs to be corrected. Let's go ahead and get started. Hey you, I'm Crystal, a CPA at Life Accounting, where we help you to save on taxes and build wealth. If you're new to the channel, welcome. I'm glad to have you here. Go ahead and subscribe to the channel so you don't miss out on future videos. Also, hit that like button for me so others can benefit from this video as well. And if you have any questions or thoughts throughout the video or just simply want to say thank you, make sure to comment down below and I'll be sure to reply back. Sound good? All right, let's dive in. So as a CPA, I've worked with countless individuals and businesses in preparing their annual tax returns. This also means I have reviewed their previously filed tax returns, and there are some very specific situations when filing an amended return is necessary. In today's video, I'll be going over when you should file an amended tax return, when you should not file an amended tax return, and 5 tips for filing an amended tax return. Starting first with when to file an amended tax return. The IRS states you should file an amended tax return if you entered your income incorrectly, you did not claim credits you're eligible for, you claimed deductions incorrectly, or you claimed the wrong filing status. These are very broad reasons to file an amended tax return, but let's consider some specific examples of what these scenarios look like. Entering your income incorrectly could mean that you received a W-2 or 1099 after you already filed your tax return. Sometimes employers and businesses are late with providing workers with their W-2s and 1099s, in which case the worker probably already filed their tax return without this information and incorrectly reported their income. Or sometimes companies make mistakes on the W-2 or 1099 that they file and have to reissue a corrected one, making it necessary for you to file an amended tax return correcting the income you reported. Or maybe you started a side gig and had no idea that you had to report the extra income on your tax return. You would need to file an amended return and include a Schedule C to deduct your related expenses. All right, so maybe your tax return error is not related to income and is related to not claiming credits you're eligible for. This one is a biggie because this could mean the IRS owes you a lot of money. And the IRS is definitely not going to inform you of those types of mistakes. So pay attention to this one and amend if any of these scenarios apply to you. If someone else wrongly claimed your child on their tax return, this is a common mistake. Perhaps your ex-spouse claimed the child, but the child did not live with them for more than half the year. Both of you would need to file an amended return so the rightful spouse can claim the child. Or maybe you're a student and are eligible for the American Opportunity Tax Credit or Lifetime Learning Credit, both of which are tax credits for qualified education expenses, and in some cases could result in a tax refund. Now, not claiming credits correctly is one thing, but incorrectly claiming deductions is another. This might be the case when you're filing your Schedule C business return. You might have forgotten to include business expenses that you paid for with your personal card, for example. Or you realize that you did use a portion of your home for business purposes and are eligible for the home office deduction. I've personally seen business owners get back over $5,000 by filing an amended return to include more business deductions than what was originally reported. Of course, these expenses were legitimate, but were somehow excluded due to lapse in their bookkeeping. And lastly, filing with the wrong filing status. This one is a little more straightforward. Perhaps you got married in November, but because you were single for most of the year, you might assume that you should file a tax return with a single filing status. That would be false. The IRS considers you married for the entire year as long as you're married by December 31st. And the same is true if you got divorced during the year. If you're divorced by 12/31, your filing status should be single for the entire tax year, even if you were legally married for most of the year. To recap, you should file an amended return if you entered your income incorrectly, you did not claim credits you're eligible for, you claimed deductions incorrectly, or you claimed the wrong filing status. But there are instances where you might catch a mistake and do not have to file an amended return. Those include simple mathematical mistakes. Most mathematical mistakes are caught by the IRS when the return is processed. The IRS automatically corrects these errors, so you don't need to file an amended tax return. Or you forgot to attach a W-2 or other tax document to your return. If you forgot to include a form or schedule to your return, this is not a big deal. The IRS will contact you if they need this information in order to process your return. Or errors associated with a rejected return. When a return is rejected, the IRS hasn't accepted or processed your return yet. So instead of filing an amended return, you would just need to correct the errors associated with the rejected return. Most commonly, these types of errors are related to identity theft or someone else already filing a return using your Social Security number, or dependent information issues. If after considering all of these situations and you conclude that an amended tax return is necessary, here are 5 tips for filing an amended return. 1. Use Form 1040X to file an amended individual tax return. This form is much different from Form 1040 for your original filing. It takes into account what you originally filed, the corrections, and the differences between the two. 2. If you're filing an amended return for a refund, make sure to do so within 3 years of the original due date. So if the amended return is related to tax year 2020, you must file Form 1040X by April 15th, 2024 to be eligible for the refund. Tax year 2020 returns are due by April 15th, 2021, and 3 years after that is April 15th, 2024. 3. If you're due a refund with your original return, wait to receive your refund before filing an amended return for an additional refund. It will just confuse things at the IRS if you file an amended return before your original return was processed. 4. If you owe additional tax as a result of the amended return, file Form 1040X and pay the taxes as soon as possible to avoid additional penalties and interest. Payments can be made at irs.gov. And 5, track your amended return status online. Amended returns can take up to 16 weeks. I know, a long time to process, and up to 3 weeks from the date of mailing to show up in the system. But once a few weeks have passed, you can track the status using the Where's My Amended Return feature on the IRS website. That's all I have for today's video, a complete breakdown of when you should file an amended tax return and when you should not. Please don't forget to hit the like button for this video, and I'll see you in the next one.